Hello. Today was certainly a difficult day. We're down quite tremendously across all the indices, but I'm not concerned. And as a matter of fact, I'm going to provide some facts that I think might add some important nuance and context to today's action and make you not so concerned. If you can take all the emotion out of things, I think you'll find that today might actually be a fantastic buying opportunity. The first is that we're actually up 2% from the lows of just this week. That is right. The close of today, which was 3 and some change, or maybe even 4% on the S&P, 4.99% on the NASDAQ. On the S&P, we're up 2% from the lows experienced on Monday. So, at the end of the day, we're really just having a flat week, if you think about it. It's a volatile week, but we're not downtrending. We are not trending down on the week. We are currently 2%. That's no number to scoff at and ignore. That is 2% off the lows of the week. Additionally, in the last 25 years, we have only seen 2 days where the NASDAQ moved 4% trough to peak or peak to trough on consecutive days. One of which occurred at the heart of the 2009 crash and the other in March of 2020. We all know what happened in March of 2020. The stock market bottomed. If you go to the very beginning of this channel, we started on January 27th, 2020, discussing the potential for a coronavirus downturn. But a little after that, very beginning, we made a video on March 19th calling for a bottom in the market after not wanting to have called for a bottom in the market. And that was because that March 19th video, after the market, just like they've been for today, now over 2 years of video production, the logic for that video was we got jobs data that was bad. 500,000 jobs lost. That was a tremendous number. The market was actually up that day. Why was the market up? Well, the market had anticipated the worst. The economy was locking down. Everyone was freaking out. The market was crashing. And then we got the data, the facts, and there was no one left to sell. There was exhaustion, and the market was able to rally. We discussed in earlier videos this week how we saw that being some phenomenon that might occur, the selling exhaustion. Clearly, there was a little bit left more today, but it seems to be at today. And guess what we're getting tomorrow? We're getting jobs data. I don't know how that jobs data is going to look. I think it might be negative. It's my assumption. We had, not such amazing jobs data this week. It could end up being positive. Who knows? We're going to have to see what happens. But that's not what I care most about tomorrow. I'm just pointing out that is occurring. What I care most about tomorrow is the fact that 6 Fed members are speaking tomorrow. Not 1, not 2, not 3, but 6. And they're not speaking today. None are speaking today. Only 1 spoke tomorrow. It's almost as if the Fed knew that something was going to happen, that there was going to be volatility. And while this week has been flat, it has been certainly volatile. The Fed talked yesterday, and it caused the market to rally. The Fed talking is what caused the market to rally. The nuance, the context, the information, that is what caused the market to rally. The Fed put out its information at 2 o'clock. The market initially ticked up and then ticked down, and then Powell started talking, said one very crucial thing, that 75 basis points was off the table, and like we said in previous videos this week, the market then had to adjust for that risk and take that risk off the table as well, and it rallied. We gave up all those gains today. Pretty ridiculous. Doesn't make a whole lot of sense, because when you're taking risk off the table, you're taking risk off the table. So you're supposed to go up. That's what we did yesterday. My assumption is we get some more echoing of that risk off the table that was taken yesterday, and we continue to focus on that. So I think tomorrow there's a reasonably high probability that we have a rally day, a green day, and we don't continue this violence of today, and we don't we don't end the week down. We don't hit a new, we're basically flat since the start of the week, by the way. We're up since the low of the week experienced on Monday, but we're basically flat on the week regardless. So let's just stay calm. Let's see what happens. Obviously, I think the taste of yesterday's video is a little too arrogant, and today I'm obviously going through a little bit of humbling, I suppose. But the facts, in my opinion, and this is all my opinion, this is my interpretation, maybe there's somebody better than me. I'm sure someone can make that case. But time will tell, and my opinion and my interpretation is that we are closer to a bottom than we are to a top. And I don't think we should get to a top anytime soon. I said in the previous rally after the Fed meeting, didn't want to get to a top anytime soon. Said that at the top of that rally. Went with lots of SPY puts. But a little over a week ago, I took those SPY puts off the table. And we are adding a little bit today. We're buying the dip. That's just what we're doing. We view this as pretty much unwarranted. And we liked what we heard yesterday. We like no 75 basis point hike. We think the fact that we're not going to get that we're going to get a Fed that is tightening, that is hopefully getting inflation down to some extent, is going to mean that we can actually have a soft landing. And look, my biggest position a week ago was TBT, a 20-year inverse leveraged short bond ETF. Okay, I was short 20-year treasuries. I had well above a 5% allocation in that, and I had way more exposure to stock in options in addition to that 7% allocation of stock alone in options. So I was all up in that shorting bonds. As of this morning, I've taken all my TBT exposure off the table. And we saw TBT roll over today before the stock market rolled over. Margin calls happened at 2 p.m. Central, 3 p.m. Eastern. Gave up a little bit in the first 20, 30 minutes of that. Went farther down. And then we saw some stabilization. Possibly, who knows? Maybe it's just a little bit of a dead cat bounce, and maybe we have another violent day tomorrow. But my assumption is, with 6 Fed members having scheduled meetings on that Friday in advance, and the market having rallied after the Fed spoke for good reason, that we're going to have a green day tomorrow. And maybe the bottom, the local bottom, not the absolute bottom, because we can't do that. S&P started at 0. And obviously, I don't expect us to break the March 2020 bottom, especially when a company like MP, that's a growth tech company that happens to be doing, hard materials, beats earnings, that we are possibly making some sort of bottom here with markets down tremendously. And we're almost 6 months in to this correction. So we'll see what happens. That's today's video. And until next time, until tomorrow, peace out.